Thank you for joining. Extremely grateful. Though we are still waiting for, Deputy Secretary Customs, Mrs. Punia. She is not joined yet, but I guess, Dubeyji, when will she be joining?
Sir, she is just joining. Thank you.
Okay.
Another 1 minute, I think.
Okay, great. Excellent. So, Ashaji, we have got everybody here now. We have got Mr. Shashank Gupta, Mr. Mayur Khule, and Mr. Ratan Jain also. They are the three, experts who will be speaking after you and after Ms. Punia. So, may I request you to kindly come online and, I'll just introduce you very briefly to all the participants. So, we welcome, Mrs. Asha Nangia, Group Coordinator, MIT. Thank you, ma'am, for joining. And Asha ji is looking after several portfolios as the Senior Director and Group Coordinator. And she is looking after the development of the electronics manufacturing industry and also a number of policies and schemes which she is handling, which are very critical for the industry. She has a very long experience in STQC, being an electronics and communication engineer from Delhi College of Engineering. She has over 22 years of experience in STQC and development of standards and as lead assessor for ISO 9000 and ISO 17025. So a very warm welcome to you, Asha ji. Thank you for joining, and over to you for your comments, please, before we will request Mrs. Punia to speak after you. Thank you, ma'am. Thank you very much.
Thank you, Rajuji, for giving me this opportunity to interact with the industry. A very warm welcome to the industry on this webinar on manufacturing and other operations under warehousing regulation that's normally called as MOOWR scheme. So because since my perspective would be related to the electronics sector, I would just like to give a brief about the status of the electronics manufacturing in the country. So as you are aware that electronics manufacturing is one of the largest and fastest growing industry of the world. And electronics manufacturing sector not only holds holds an economic importance, but possesses an strategic importance as well. And electronics manufacturing is expected to grow around $300 billion by 25-26. That is what we have an ambitious target. And currently it is around $101 billion. As per the industry estimates, more than 25 lakh direct and indirect jobs have been created in the electronics sector, and which is expected to increase to 1 crore by 25-26. So one of the main items where we have seen the tremendous growth in manufacturing is the mobile phones. So with the steps that government has taken, India has emerged as the second largest manufacturer of mobile handsets in the world in volume terms. And as of now, there are more than 200 units that are manufacturing cellular mobile phones, their parts and components, and which were only 2 in 2014. So this shows the journey of the electronics manufacturing, how it is growing. And production of mobile phone, if I talk about that, it was only 6 crore mobile phones in 2014-15, and now it is 45 crores in 22-23. So now we have reached a stage wherein 99.2% of the mobile phones being used in the India are made in India only. And now India has become an exporting country also. If we have to increase our manufacturing capacity, definitely we will have to see our export markets also. And now what needs to be done to enhance exports are different steps that to be taken to promote manufacturing also. And we are taking different steps to promote manufacturing in various sectors, including the IT hardware, the wearable hearables, the LED luminaires, semiconductors, etc. We not only want to increase the manufacturing of the finished goods, but also the component ecosystem in the country. So government has taken several initiatives to boost electronics manufacturing, including the semiconductors in the country, and incentivize large investments in the electronics goods and appliances, and also to exports. So we had announced the national policy in electronics way back in 2012, which was modified in 2019 also. And now the vision of the NP 2019 is to position India as a global hub for electronics, system design and manufacturing by encouraging and driving capabilities in the country for developing core components, including chipsets, and creating an enabling environment for the industry to compete globally. To attract the incentivize large investments in the country and to promote exports, we have notified various schemes. We called as production linked scheme for the mobile phones. We called as a PLI for the large scale electronics, PLI for the IT hardware, scheme for promotion of manufacturing of electronic components and semiconductors, modified electronic cluster schemes to provide support for creation of world-class infrastructure along with common facilities and amenities, including ready-built sheds, plug-and-play facilities for attracting global electronics manufacturers in the country. So there are various steps, and everybody would be aware. So yesterday only government has approved 3 fabs in the country, 1 semiconductor fab and 2 OSAT fabs in the country. So that is one of the major, I would say, the success story for the country, because we were trying to establish semiconductor facilities in the country. Now coming back to this MOOWR scheme, because now we are targeting that how to increase the exports. As of now, there are various zones and schemes to promote the exports. Like we say, special economic zones, SEZs, export-oriented units, they are there, and government has provided different initiatives to them so that they manufacture in SEZs or the export-oriented units. There are different schemes for that, and they can manufacture there and export to them. They are allowed to import the goods at zero duty, and the capital goods are allowed to be duty. They can import the second-hand goods also, so that they become competitive. And since duties are not exported, so that's the reason the duties are not levied on the goods being imported in the SEZs or on EUs also. So these were already in existence, but government still there was no other option for the domestic tariff area, the units that are manufacturing in the GTA. So they were all have to pay the customs duties and the good duties on the capital also. So the government, the industry, they have taken up this matter with the industry, with the government, and the customs had come up with this MOOWR scheme. So the government, aiming to bolster local manufacturing, has revitalized the long-standing manufacturing and other operations in the warehousing regulation scheme, which was initially instituted in 1966 itself under the Customs Act. So since it was under the Customs Act only, it only provides for a deferred duty. So it's not that the duty would not be there, duties would be there, but if you import the components and export them, since duties would not be exported, duties would not be exported, the duties are not levied on those goods. Further, the capital goods are also allowed to be imported at zero duty under the MOOWR scheme. So this facilitates the industry also. And when this industry has taken up this initiative, so the government had allowed zero duty on inputs and for the capital goods. So that facilitated the industry, and exports has increased from the MOOWR units. And the scheme permits owners of warehoused goods to conduct manufacturing, assembling, repackaging, relabeling, repair, etc. And there are some conditions along with this. So rejuvenation comes through the liberalization of the crucial compliance requirements in the revised MOOWR 2019. So which was announced in 2020 itself with the overarching objectives of the Atmanirbhar initiative. So the MOOWR schemes, it allows, I just mentioned that it allows for duty-free imports of raw materials and components. If the goods are, whatever the goods you are manufacturing using those components and the capital goods, no duty is charged on the goods. But and the goods being imported. But once the same inputs that you are importing, you are manufacturing the finished good and you are exporting to DTA, definitely you have to pay the deferred duty. There is no IGST on the goods also that are being imported. This scheme facilitates for ease of doing business. It facilitates, it provides for promotion of exports also and innovation also. And this provides for ease and hassle-free online application process. Only Principal Commissioner of Customs or the Commissioner of Customs Act is a single point of contact. Everything is digitalized, and any new manufacturing unit can set up their facilities under the MOOWR and take the benefits, and they can start manufacturing and other activities also. So MOOWR has all this. Having said all, So this facilitates manufacturing into the country for exports also. But along with the scheme, there are some challenges. The industry has indicated that under the scheme, it provides for the duty-free import of inputs and the capital goods. One challenge they are facing is the scheme says only deferred duty. So when the capital goods are imported, they are allowed to be duty free. But even after a period of 5 years, 10 years, when they have ended their life, if they have to be transferred to DTA, they have to pay the duty on the full amount on which they have procured. So that's a challenge for the industry. Even if the industry wants that the inputs or the capital goods that are imported have to be recycled also, then also they have to pay the complete duty. That is one challenge that industry is facing with respect to the depreciation on used capital goods that have been imported by the industry under the MOOWR units as a MOOWR units for manufacturing. Second, the challenge that industry has indicated is that when they import the inputs, that is duty free, but when they manufacture the goods, since the duty is only on the imported goods that are imported, if they sell the finished good into DTA, they have paid duty on the goods also. But point is that makes the DTA uncompetitive. So we have taken up the concerns of the industry with customs that there should be a procedure that should be established for movement of goods within the unit, across the unit, MOOWR to DTA or MOOWR to SEZ and SEZ to DTA or whatever of all the 3 units. Because industry would like to utilize the space they have. Wherever they have the capacities, they would like to make use of it. Customers have their own challenges since the capital goods that are imported into the MOOWR unit are their value is not incorporated in the final good that is being sold out of MOOWR. They are working on some mechanism how to inbuild or how to allow the depreciation of goods. Customer is aware of the concerns of the industry, but they have to come out with some mechanism. And industry has another concern that we provide, as a government, provide incentives for the exports. These export incentives under the ROTTEP scheme, I would say, they are available to the DTA units. They are also available for the government is considering them for providing the incentives to the SEZs and UUs also. But as of now, the government has not taken any initiative to provide the ROTTEP initiatives or export incentives for the MOOWR units. These are some of the concerns that industry has raised. Additionally, one more concern is that initially when the MOOWR unit was established, it was that someone will, for example, will manufacture the mobile phones in the MOOWR unit. They'll import the components and manufacture the mobile and sell it and export it. But now, since the whole ecosystem is coming and the whole ecosystem is being established into the MOOWR units also, so there is a challenge with the industry that industry is facing from one MOOWR unit to the other MOOWR unit, and how the duty would be transferred, and if they want from one new MOOWR unit to the other MOOWR unit. These are, I would say, some of the challenges that industry is facing in terms of the manufacturing in the MOOWR unit. But yes, I do agree to it that every scheme or every unit had their own pros and cons. If I talk about SEZs, they get duty-free imports for the capital goods and the inputs, and they get the export benefits. They are allowed for second-hand capital goods also. Similarly, EOUs have other export-oriented scheme also. MOOWR has a benefit of that. But while coming up with the policies for movement of goods within the MOOWR, across the MOOWRs, and across MOOWR, DTA, SEZ, I would request customs that the interest of the DJ manufacturers are also protected. So that is all from my side on this MOOWR. But yes, this scheme has very well been received by the electronics companies. And major beneficiaries of the scheme in the electronic sector, I would say most of them have already joined the MOOWR scheme, and hope this will increase the exports from the country. Thank you so much. Rajuji, you are on mute.
Sir, you are on mute.
Thank you very much. That was a nice and elaborate description in the little time that we have. I really appreciate that, Ashaji. Definitely, I mean, the policies are not simple, and we have all learned that the hard way, that we need to understand, and I mean, formulation and implementation of policies is never an easy thing. But this is definitely a very attractive scheme, and I'm happy to see that my screen is showing 115 participants. I think which shows that the industry has a lot of interest in this scheme and would like to utilize it. So, before I welcome, Ms. Komila Punia, Deputy Secretary, International Customs Division of CBIC, and thank her for joining us. I would just like to share very briefly that we have prepared a small booklet on MOOWR, and Mr. MP Dubey is just displaying that. So we are trying to cover some of the salient features of the scheme, and we have also put the presentations which are being presented today by the three experts who are there in this booklet. So they will be available for reference to all the participants and all the industries. So thank you very much, Dubeji. You can remove that now. Thank you so much. So this is just for information, and we'll be sharing this with everybody in soft copy and the hard copy also. It's not a problem. So we would like to serve the industry in this way. Thank you so much. I would now like to welcome Ms. Komila Punia. Ma'am, thank you very much for joining us. We have never had the privilege of meeting you, but it's extremely kind of you to accept our invitation. And Mrs. Asha Nangia had also requested that customs must be represented in this webinar, because ultimately it is the customs the CBIC which is going to implement the policy. Ma'am, are you there with us?
Yes, Mr. Goyal, good afternoon. I'm here,
Thank you.
but I think there's some problem with my video. I'm not able to turn it on. Maybe it's
Okay.
been stopped from your backend, because earlier when I joined, I could turn it on, but now I'm not able to do it.
Oh, okay. I don't think that anybody here has the courage to stop your video. It is something. It is something which maybe maybe something which has happened. I don't know. I really don't know much
That's
about
fine.
IT.
If I'm audible, sir, then I'll just continue.
No, ma'am, you are definitely audible, and I would just like to take 1 minute to give a very brief
please.
introduction of yours, because there are 115 participants here. So we would like to welcome Ms. Komila Punia, who is the Deputy Secretary CBIC, and she is looking after the International Customs Division. She has been in the department since last 12 years and has experience in customs policy, compliance, and enforcement. I see that you have also been looking after the implementation of various rules of origin and FTAs and preferential trade agreements, ma'am, which is something of great interest again to the industry. You were also with the DRI earlier, and Ms. Punia is an engineer from Kurukshetra University and a management graduate from IIT New Delhi. I think with those few words, ma'am, I'll give it back to you and look forward to your views on the matter. Thank you so much.
Yeah, thank you, sir. A very good afternoon to the esteemed organizers from Elkina, Madam Nangia, and other distinguished speakers, guests, and participants. At the outset, let me express my gratitude for being presented with this opportunity to deliver one of the keynote addresses. And having worked in the related policy space, I did reflect on some of the key takeaways that we are hoping as a department, the audience will be able to take away from this talk. And from my end, I would like to touch upon the birth and evolution of MOOWR. What is its current state, as in the industry impact? And what does the future hold in terms of greater automation, digitalization, and other ease of doing business enhancements? I'm also thankful to Madam when she initiated her keynote address. I think Ma'am has been gracious enough to give a good background of MOOWR, what it entails basically in terms of benefits. And Ma'am has also elucidated some of the industry concerns that have been in our knowledge and have been shared consistently with us by MeitY, as well as stakeholders in general. So let me begin by saying about MOOWR. First of all, it's very important to understand, and we keep emphasizing on it internally, that MOOWR for us is not a scheme really, right? MOOWR for customs is an extension of the existing warehousing provisions. It's very important to understand that concept, because I understand as industry or as other line ministries, one is used to seeing a lot of export promotion schemes that which commerce keeps doling out, right? But for customs, it's merely an extension of the existing warehousing provision. So we should understand that MOOWR, so to say, is a child and a subset of the existing warehousing provision. So one must always keep in mind the overall framework of bonding or bonded goods, because MOOWR is a part of that bonded procedure. So with that sort of framework in your mind, I hope all the industry participants will be able to appreciate why MOOWR is the way it is, or why it's designed the way it is. And I'll also be taking this fundamental premise up when I address the industry concerns, which Madam had pointed out, some of those, right? So now ZBIC had launched MOOWR as an extension, as I said, of the warehousing provisions under the Customs Act. The manufacture inbound concept has been in existence from the very beginning, and it got a transformational change in 2016 budget, as you would have known, which fundamentally liberalized these warehousing provisions. But otherwise, manufacturing inbound and MOOWR has been there for many, many years. But in 2016, it got kind of a shift whereby Section 61 was added, and a warehouse under Section 65 was allowed to retain capital goods till their clearance, inputs consumable till their consumption, or clearance from a warehouse. So with the amendments in this budget of 2016, the physical control over warehouses was replaced by self-removal procedures, several procedural gaps such as forms and procedures for licensing, etc., were all streamlined. And MOOWR was aimed at promoting domestic manufacturing, as Ma'am had clearly pointed out. MOOWR was aimed at promoting domestic manufacturing, and as an outcome, position our country as an attractive investment destination. Now, MOOWR is MSME friendly. It does not have any minimum investment requirement or restriction on its location, and it also does not have any export obligations. Goods can be cleared for exports or for home consumption. It's not that you're bound to clear goods only for exports and you cannot clear in DTA. You can equally clear in DTA. There is no export obligation in the case of MOOWR. And also, again, I'm repeating what was said earlier, but these provisions contain the potential to further the agenda of Make in India and Atmanirbhar Bharat. And in terms of the legislation, let me just touch upon, obviously, Section 65 is fundamental in the Customs Act, under which the permission for MOOWR is given. And this is further operationalized by the MOOWR regulations of 2019, which were notified by notification 69 by 2019. This was further accompanied by certain explanatory circulars, which were some of the important ones, which I can recall were, I think, 34 by 2019 and 48 by 2020. All these fundamentally lay down the procedure, the documentation and compliances to be followed. But I must also add that coming from customs, MOOWR is balanced by adequate safeguards. So there is an antecedent verification, there is a site verification, there is a triple duty bond backed by an insurance policy, etc. As on date, let's now talk of how, so this was in brief how MOOWR came about being. And keeping our premise of that it's a subset of the warehousing provision under the Customs Act. Let us see how it's done after it got this major shift in starting 2016 and then finally 2020. As on date, more than 900 units, to our knowledge, are registered under MOOWR. They span across varied sectors. It is automobile, cement, textile, electronics, healthcare, pharma, shipping, etc. And I'm very happy to be on this platform because the total share of investments in terms measured in terms of the capital goods which are warehoused, or capital investments in terms of the capital goods, imported capital goods put in MOOWR units, is about 58% of these belong to the electrical and electronic sector itself. So this sector is one of the major, so to say, users or adopters of MOOWR. I may also like to touch upon some, if I may be allowed to touch upon some impressive statistics in terms of total value of imported inputs under MOOWR, I think it's roughly 34,000 crores, and the duty deferred on imported capital goods is roughly about 2,000 crores. And we've already seen exports of value 15,000 crores, right? So this is in a brief a snapshot of where we are with MOOWR, how it started and where we are. Having said that, although the MOOWR has been a success prima facie, but as a department and as government, we're always looking at enhancement. We are looking at IT systems and further amendments wherever mandated in the laws and procedures. This has been a continuous endeavor. So the digitization and automation of the customs warehousing. Now, as I said, the fundamental premise that MOOWR is a subset of warehousing. So we are also parallelly overhauling the entire warehousing space, right? So in fact, we have made commitments to PSE that we are going to automate and digitize the entire warehousing procedures, of which MOOWR is a subset, which includes not only document automation, but entire physical movement, tracking, returns, all of that. And the following workflows, as you know, are already automated in terms of warehousing of goods, which also applies to MOOWR. So there is an into-bond bill of entry, there is an ex-bond bill of entry. Then, at least from a documentation perspective, because of the into-bond and the ex-bond bill of entry, the reconciliation is happening on the system. But as ma'am had pointed out, I would like to say that one of the challenges of MOOWR now, in terms of movement of MOOWR to DTA, we don't see any confusion in that. That's fairly laid out easily in our regulations, in the Act, that you have to pay duty, and the duty is only deferred, as ma'am had said, and the duty is paid on so much of the inputs that are contained in the good that you manufacture, right? So being a MOOWR unit, you can also function as a pure play warehouse. In that case, you have the 3 months time period, I think about 90 days, in which you can take the inputs out as such also. So your duty, in that case, if you're behaving just like a pure play warehouse, you just take the inputs and, release them in the DTA, but then you only have a 3 month window. However, if you undertake permission for MOOWR and you have to process your goods, then obviously your duties are deferred till you release that good, either for export. If it's export, your duties are foregone and we don't have to pay anything. But if it is released in DTA, then the regulations and the Act is very clear that you have to pay duty on as much of the inputs as are contained in the product, right? And so in terms of MOOWR to DTA, we are very clear. In terms of now, again, if a good is moving from bond to bond, we are very clear because that is covered under the warehousing provisions, right? The bond to bond movement. I do take ma'am's point saying that the SEZ to, a bond movement, there is some kind of sketchiness there. We are very well aware of it. And this is under examination with the board currently. I would just like to update this esteemed audience about the kind of further enhancements that we're bringing out in the system. I think it's important to understand that a warehousing module, which is being developed, which will take care of all warehousing transactions, is being developed by our Directorate General Systems to capture all categories of transactions, whether it's ex-bond, into bond, bond to bond, and even bond to bond on system, not the current manual way. And this will also facilitate validation of electronically filed returns. And for the warehouse, which are going to be permitted under Section 65, that is MOOWR, we are already at an advanced stage of looking at electronic filing of returns on iSCADE. And there will also be some kind of a data validation facility. Along with the above, a module is also being developed, which will enable online submission of warehousing applications on ICS. I mean, right now you are applying online on the Invest India portal, but we're also going to have it all digitized, starting from your licensing to your being given the permission of, to your warehousing licensing, to your being given the permission of MOOWR, and then everything from physical movements of goods as well as all your documentation is going to be online. But once again, I'd like to say that you have to see it from a broader perspective of the entire warehousing provisions, all procedures mandated under warehousing going online, right? And when it comes to the physical movement of good also, as a department, we are very keen to track the physical movement of goods. We want to avoid any kind of leakage. We want to safeguard revenue. So any kind of bond-to-bond movement and all, we are already exploring solutions such as the electronic cargo tracking system, etc. So this is broadly, I just wanted to give a sense of how we started on with MOOWR, where we are in terms of industry impact, and the kind of automation and digitalization that we are looking at for greater ease of doing business. I would just like to now, before I end my keynote address, I'd like to address some of the concerns that ma'am had pointed out in her address. One, she had spoken about depreciation of capital goods. It's a valid concern. Let me be frank enough to admit that. And we've had several representations on that. And also line ministries have written to us for this. It is currently under examination is all I can say. And it is an advanced stage. We've taken inputs from all stakeholders, and we are considering a workable solution to address this concern, that is depreciation of capital goods under MOOWR. In terms of roadmap, again, what ma'am has written, and I can share it here, that as a department, we have given an NOC to DGFT for extending roadmap of MOOWR units. They have asked us for some data, which we have provided to DGFT too. So that should address the roadmap bit. And I think there was some other concern ma'am had raised on interest, which I do not recall now. But I think interest, it typically flows from the warehousing provisions. So if ma'am would be able to elaborate again what the interest concern was, I can take it up. So, but that is all from our end. I just wanted to assure the audience and the organizers that both MITI and Department of Revenue are working hand in hand to ensure that MOOWR is adopted in greater numbers, and more so by the MSME, trade, that is they adopt this, and therefore we're also looking at greater automation so that it's more transparent, more easy to understand, and more easily implemented. That's all from my end. Thank you so much.
Thank you very much, Ms. Punia. I think that was very clear and very, lucid, if I can use that word. So I think in such a short time, it's hard to really explain these schemes, but you have covered most of the points. If Ms. Asha Nangia is still there, she can possibly come back to that question on interest, which you asked. If she's there, she can ask it again. I'm not sure if she's still there. I see her on the screen, but if she's there, then possibly she'll come back. And Ashaji, you had asked a question regarding interest payment.
No, Rajesh, I had asked a question about the depreciation of the capital goods. When the good capital that are used for manufacturing, they get consumed, they become the second-hand goods. So when they have to be exported, there is no issue in that. But if they want to recycle the goods, or if they want to sell those capital goods to DTA, they have to pay the duty on the total value on which they were imported. So that was the payment of duty on the full value of the capital goods. That was the concern that was raised by the industry. Thank you.
Okay. Ms. Punia, as you were saying, I think the question you've already answered. I think, and Ms. Punia already explained that this matter is being considered, I guess, and because it seems to be definitely a very logical and valid concern, because if somebody has used some equipment for 5 years, 10 years, and then they have to pay the original amount of duty on it, then it is obviously I would say not fair, if I can use that word. But anyway, that is a policy, and maybe something will be done on that soon. So, but I believe it is under consideration of Customs Department, so we can look for some resolution to that very soon. I would thank Ms. Punia once again, and also Ms. Asha Nangia. I think we have got 3 more presentations. There we do have some questions, but I think it's hard to kind of answer all the questions. Some of the questions are coming in the chat box, which we will take up. Some specific questions we had actually, which were sent to us by some of the members who are using MOOWR, was that can the resultant goods be transferred from MOOWR to MOOWR? That was one question which was there. I believe there is some regulation 13 which provides for transfer of goods. Then the other was, can IGCR benefits be availed simultaneously within the MOOWR facility? So I guess it means, that claiming, IGCR benefit and then, using the MOOWR facility as well. So because there is no explicit provision in the notification on this. So there are some such questions. I think we'll possibly take them up separately and we will try to. So I would specifically request, Ms. Asha Nangia and Ms. that we'll be sharing some queries with you. And I hope that your respective departments would be able to answer and then take it up if some of them need some resolution. If that is okay, then we will, then we will move to our three experts now who are here. So should we move ahead now, ma'am?
Mr. Goel, thank you so much. I look forward to your questions that you will be sharing with us in written. This is Kumala, and we'll we would then provide you an answer. You can even email it to us, and I think my under secretary is in touch with you, so you can just email those to us. On that note, I'm sorry, but I have some other commitments right now, so I'd like to take your leave of this August forum right now, and I wish you all the very best for this webinar.
Thank you. Thank you. Yeah, thank you very much, ma'am. We may be seeking a meeting with you with some of the questions, and I hope at that time we'll be able to meet you or your under secretary. So that will be fine. We'll be able to. We'll try to resolve the problem.
We look forward. Thank you so much.
Thank you. Thank you. Thank you very much. So now I will request, our, we've got, three eminent experts here. I will first request. So we have roughly 10 to 15 minutes for each of you, please. I hope that will be enough. I think that should be enough. We are a little bit, beyond time already, but I think it's a very interesting subject and we don't mind going overboard. I still see that we still have, the full number of participants. So nobody has left, which is really great. So that means everybody is really interested in the subject. So I'll first request Mr. Shashank Shekhar Gupta, who is the founding partner at MOOWR Tax Advisors, to please give his presentation. So Shashankji, what would you be telling us about? I think you will be telling us about the procedure, the MOOWR procedure, right?
Yes, sir.
Okay, thank you so much. Shashank is a young colleague. I think I met him here about a few years back, and you've been very active, and we are very grateful that you've been in touch with Elcina all the while. So over to you, Shashank, please. Thank you so much.
Thank you, sir. And likewise, it's been always a pleasure and honor to interact with you and to facilitate Elcina and its members in all the interaction drives and update drives. For today, we've prepared a presentation. I'll share that up here quickly. Is my presentation visible?
Yes, it is visible.
So on the policy aspect, I believe we've already heard from Ms. Nangia and Ms. Kamala. I would specifically be focusing upon the procedural part. On the procedural part, I believe since we are all here, I believe there may be some members who were already covered under the MOOWR scheme and are looking for specific answers to the problems that they may be facing. And there would be a certain portion who would still be looking forward to evaluate whether or not they should move into the MOOWR scheme. And if they move into the MOOWR scheme, what are the procedures involved and what is the process? So as Madam had already mentioned, it's application has to be filed online. It has to be filed through the Invest India portal. It's an online application. Interesting part is that once this permission is obtained under MOOWR scheme, it remains valid until it is cancelled or surrendered. So there is no requirement for timely renewals under this permission. There is no full-time control or supervision of customs. It is more or less self-regulatory, self-assessment based. Of course, there is the right which is reserved by customs to undertake periodical audits, and that would be completely dependent upon the risk assessment at the back end by the customs formation. Then, as part of periodical compliance, a monthly return has to be filed in a specified format, and the format has been specified in Annexure B as part of the Circular 34/2019. Then, so how do we proceed about the application? You have to prepare the application in Annexure A. Annexure A application is basic, seeking details about the entity, its leadership, if it's a private limited company, about its directors, seeking all the validation and verification related details. Then what is most important is to have the details of the premises which would be registered as part of the MOOWR scheme, or for which this license would be obtained. So we have to submit, so the application has to submit a ground plan wherein basically there should be appropriate fencing for safe storage of goods, and there should be a dedicated entry and exit gates. While with reading of this, you may understand that there has to be a periphery within which goods can be kept, but can be an exception also, as long as the safety and security of the goods proposed to be imported can be assured and satisfied to the satisfaction of the jurisdictional customs formation. Then there is a requirement for appointment of a warehouse keeper. This warehouse keeper has to be a person who has some professional qualification, has some reasonable experience in the past. While there is no specific prerequisite that whether it has to be a professional, whether it has to be someone who has to have a specific degree, but at the same time, warehouse keeper would be the person who would be responsible for signing all the documentation relating to entry and exit of goods within this warehouse. Then the facility should also have secure features, which such as the burglar alarm, CCTV, some security agents, security guards, which should be guarding the premises 24/7, and there should be fire security as well. So the basic underlying principle is that whether all the measures have been taken to ensure safety and security of tax-free or tax-deferred goods which may have been imported into that premises. Then, as Madam mentioned, there has to be a triple duty bond. Triple duty bond meaning, for example, in one of our cases, one of our clients was saving approximately 30 crore rupees of duty. They had to file a bond for 90 crore rupees of value. This bond doesn't mean that you have to give any bank guarantee. It's an undertaking on a stamp paper in the name of the President of India, that in case there is any duty which needs to be paid and you've not paid, you're holding yourself liable up to the triple amount. Triple amount is there basically to safeguard the tax interest as well as the penalty portion payable to the government in case there is any liability to do so. Then insurance, there has to be an insurance again in the name of the President of India, and insurance should be sufficient in value to safeguard all the tax-free or tax-deferred imports which have been made, and it has to be yearly renewed until the life cycle of the permission under MOOWR scheme. Then, of course, at the time of obtaining the permission, there would be a physical visit by customs officer. This is generally by the lower level, by the initial level of officers, which is generally at the level of the inspector and superintendent. They visit your premises and they ensure that all the facilities are available, and they verify that online also. Then once the visit has happened, the application is then moved to jurisdictional customs. Now, one important part here is that when I mentioned jurisdictional customs, for the entire Uttarakhand and for the entire Western UP, the jurisdictional customs is based in Noida. So while the hierarchy of customs is sitting at Noida, essentially at Dadri, they cover as far back as up to Dehradun and even beyond that. So what we need to understand is that jurisdictional customs may not mean that someone who is there within your city or your district. So you have to identify who's the jurisdictional customs. And it becomes a slight of a challenge also that if you're setting up your unit, say in Uttarakhand, the permission has to be routed and ultimately the permission would be finalized and granted at Dadri. So this is something which you need to keep in mind. And the final approval, of course, is in the hand of the jurisdictional principal commissioner or the commissioner of customs. Then here is a list of documents. It's a holistic list of documents. These are all self-explanatory. I need not deep dive into that. All of these are basically to ensure that you have a safe, secure premises, you have an ongoing business, you have the business has pre-existence, and all the required documents validating your presence, validating your business historic history are there in existence. And if all these documents would be required as part of your application required to be submitted for obtaining permission under the MOOWR scheme. Then some other procedural aspects are that there has to be a prominent signage on the facility, on the premises for which you've obtained your permission under MOOWR scheme. It has to mention that it's a bonded warehouse. You have to have a computer-based accounting. This is more or less by default for most of the organizations today. Records, all the records for receipt, clearance, usage of goods imported within the scheme have to be maintained minimum for 5 years. And of course, there has to be a monthly reporting in Annex B. There is also a requirement to maintain all these records in digital form at a location other than the registered location. So God forbid, if there was any supernatural event leading to destruction of that place, there should be a backup available with all the records in a digital form at another location. Then record of all the work that you've done with the warehouse goods has to be kept, including even draw of samples from warehouse goods, and documents indicating receipt as well as removal of goods are of utmost importance, and they have to be maintained to keep a trail as to what all goods were removed duty-free or duty-deferred, and whether or not they have been removed if for export, or if they're cleared in DTA, whether or not proper duty has been paid on those. Then transportation of goods. Transportation of goods can be of two types. One can be where you've imported goods at the port, and from the port, goods are moving to your facility. For this movement, there will be a secure seal one-time lock, which will be affixed by the customs. And then there will be subsequent movement by the licensee from their premises to another premises. On those, the licensee has to affix one-time seal and lock. In this movement, an obligation has been put on the licensee that if he's receiving any goods which have been imported, he has to ensure that all the goods match with the details put in the bill of entry for warehousing. So bill of entry for warehousing would be the document basis which goods have been cleared at the port of import. When you're receiving those goods, when you're removing the seal put in by customs officer, and when you're verifying goods, you have to make sure that all the goods match with the details mentioned in the bill of entry for warehousing. If there is any mismatch, immediately that has to be reported within 24 hours to the customs. If there is no discrepancy, then the goods can be received. The bill of entry for warehousing and the transportation document has to be endorsed, and a copy has to be retained. Similar, on the other hand, if the goods are being exported, then a shipping bill and bill of export has to be filed. Transportation, of course, needs to happen under one-time lock. And if it's a DTA clearance that the unit is undertaking, if the licensee is undertaking, then they have to file a bill of entry for home consumption, and they are also liable to pay the applicable duty on such clearances. They have to retain a copy of bill of entry for home consumption for their records. There may be a question whether or not job work is allowed. Job work could be of two types. One where the licensee is wanting to do job work for someone else in their premises, or whereas on the other hand, the licensee may be wanting to send the goods outside in DTA area for some job work and to bring them back or to directly clear them for export. All of this is permitted, and there is a specific circular around that. So job work is allowed. Any other exemption? So say suppose you're importing 10 goods, 10 types of different goods as the licensee is importing. 8 of them are dutiable. 2 of them are subject to nil rate of duty, or there is some exemption available. So you can claim that exemption on those 2 goods. For those 2 goods, directly at the time of clearance, bill of entry for home consumption can be filed. And for the rest 8 type of goods, you can file bill of entry for warehousing. And hence, to that extent, to the extent of those 8 goods, you will be liable at the time of subsequent clearance. To the extent of those 2 goods, since already bill of entry for home consumption has been filed, there is no liability. Waste and scrap, either generated for DTA clearances or generated for export clearances, in both the cases, duty has to be paid at the time of their clearance. If there is any change in the standard input-output norms for your product, it is the obligation of the licensee to intimate that timely to the jurisdictional customs. Procurements from DTA are allowed on payment of applicable GST. And trading, as Madam mentioned, trading is also allowed, but there is a time limit, otherwise there is an interest obligation. And very recently, once, so in the last Finance Act, Section 65A was introduced in Customs Act. So the idea behind MOOWR was to defer the custom duty as well as IGST. In Finance Act 2023, government proposed to do away with IGST deferment. Hence, for MOOWR scheme licensees, the customs duty would be deferred, but IGST would not be deferred. This section was embedded, but it is still yet to be effective. So time being, IGST deferment is being continued, but that may be taken away. The governing section for that is already embedded. With this, I conclude my session for today. Thank you so much. It was a pleasure addressing all of you.
Thank you. Thank you, Shashank. Very well explained. And I would like to say this to all the participants that Mr. Shashank Gupta is available. And I think your email ID was there on the last slide, but we could not see it very clearly. So maybe you can share that now for a minute. So those who are wishing to contact you separately can do that. Can you share the email ID, please?
Sure, sir.
Yeah, so this is shashank.gupta@margadvisors.com. And of course, your mobile is also there. So those interested may kindly note it. Otherwise, they can take it from us. We are always there. Thank you, Shashank.
Thank you, sir.
So we now come to the next presentation by Mr. MOOWR Khule. Mr. Khule, your presentation you will be sharing, or Duveji we are sharing?
I think
I
Mr.
think
Khule
Mr. Khule can
will
share
say.
it. I think Mr. Khule, you can share.
Yes, I am sharing my
Yeah,
presentation.
please, yeah. So very briefly, we have a 2-line introduction of Mr. Khule with us. He is an expert in matters relating to DGFT and customs compliances, and has a lot of experience in foreign trade policy, and he specializes in the MOOWR scheme. So I think with that, I would like to hand it over to Mr. Khule for your presentation. And I think the subject you are covering, you are going to explain to us a practical life experience, right, on how the scheme works. Okay, thank you. Over to you, Mr. Khule.
Thank you very much, sir. Hello, good afternoon to all of you. Thank you for participating this session. Today we are going to understand the MOOWR scheme through a practical case study. My screen is visible to you?
Yes.
Yes, thank you.
Yes, visible.
Okay. Today we are going to understand the MOOWR scheme through a practical case study. A case study that transformed the working capital of company. In the end of this session, you will gain the insights of deferred duty benefit. This is a simple flow chart showing the movement of material into private bonded facility. You can import raw material and capital goods without payment of basic custom duty and IGST. But you have to pay GST while local procurement. After manufacturing, there are two types of sale, export and local sale. While export, you will get exemption on import duty, that is on basic custom duty and IGST. And on DTA clearance, you have to pay proportionate custom duty, but without interest. Now move to actual case study. We were approached by the company Pactep Innovation Private Limited. They are into pharma packaging and had set up factory at Chakan, Pune. Besides that, they were seeking solution for working capital required for production, manage inventory, and day-to-day operation. Their situation at that time was as follows: sales and inventory, like their export sale was 6 crore and domestic sale was 155, and their inventory period, means stocking period, was 69 days. They were taking export benefits of duty drawback, that is all India rate of drawback, and road tape, remission of duties and taxes on exported product. Duty drawback is at the rate 1.2% of FOB value, and road tape is also 1.2% of FOB value. So total export benefit was 14.40 lakh. Their import scenario seems that they are having huge import value, means their import value is 62 crore. They were paying around 5 crore 30 lakh basic custom duty plus SWS, that is 8.25% of import value. 8.25% includes 7.5% basic custom duty and 10% on that basic custom duty is SWS. IGST is around 11.21 crore and total import duty was 16.35 CR. We have studied their import transaction, and we came to know that their working capital was mostly stuck at import value, import duty. And there is a way to free that working capital. So we have suggested and implemented MOOWR scheme. After the implementation of MOOWR scheme, they have availed following benefits. On export sale, import value with respect to export turnover was 30 lakh, in which basic custom duty and social welfare charges exemption with respect to export is 2.47 lakh and IGST exemption is 5.84 lakhs. So total benefit is 8.32 lakh. On domestic sale, import value with respect to domestic turnover is 62 CR and deferred import duty with respect to domestic sale at 27% is 16.7 CR. If we calculate it on monthly basis, it would be 1.39 CR. We have calculated interest on the basis of working capital interest rate, that is 15% per annum, and their inventory period was 69 days. So it would be 2.84% per month, and it will come to 3.96 lakhs per month duty saving amount on interest. And if you calculate it on per annual, it would be 47.54 lakhs. So their interest amount saving is around 47.54 lakhs per annum. This chart shows the total benefit, means on export sale and in import sale. So total interest benefit is derived from last slide, that is 3.96 lakhs. BCD benefit and IGST benefit means it is the exemption on your export sale, that is around 20,000 and 48,000, and total benefit is 4.16 lakhs and yearly it would be 50 lakhs. Yes, there we must consider the expenses to run this show, means run this MOOWR scheme. There are, if you are going to sell material in domestic market, you have to file ex-bond bill of entry. And Tactime Innovation are having 25 ex-bond bill of entries in a month. There are charges of rupees 3,000 for filing ex-bond bill of entry, means total 75,000 charges for a month. There are also management charges. Management charges means your extra attention of employees and management towards the MOOWR compliances, like monthly returns, yearly compliances. I have taken it 25,000 per month. So total monthly expense is 1 lakh and yearly expense 12 lakh. Now we will deduct this 12 lakh from 50 lakhs, that is grand total benefit. And after this, company gain overall advantage of 38 lakhs in a year. This is a simple interest calculation, means you can gain through your working capital interest in MOOWR scheme. These are the other provisions of MOOWR. First thing, please be noted that road tape and duty drawback refund is not allowed in MOOWR scheme. If you have open advance licenses, EPCG authorized, you can fulfill that export obligation by exporting relevant material. If you have duty paid stock at the time of MOOWR scheme, you can get refund through brand rate of drawback. Depreciation of capital goods. Depreciation can be claimed for accounting purpose, but not for payment of duty on capital goods. You have to pay duty on full amount of capital goods at existing rate on that date. You have to appoint warehouse keeper. He must be having sufficient experience because his signature required for major documents in MOOWR transactions. You can transfer goods from MOOWR to freely transfer goods from MOOWR to MOOWR. There is a no validity for license, but you can surrender it at any given time by paying all of dues. Basically, MOOWR is a duty deferment scheme. Thus, both custom duty and IGST stand deferred. There is no restriction for DTA clearance, unlike EOU and SEZ. MOOWR is not allowed in public bonded warehouse under Section 57. There is no physical control of MOOWR unit on day-to-day basis. Please be noted that there is no physical control of MOOWR unit on day-to-day basis by custom officer. The audit of MOOWR would be on risk basis criteria. There is no prescribed frequency for such audit. One more point I want to repeat that road tape, export import incentive, road tape. Ms. Punia ma'am said that we have given NOC to DGFT for MOOWR for road tape. This is a very welcoming step from CBIC. And this is our view that it is MOOWR is a big step towards Make in India elevation. It will attract huge foreign investment, generate employment and boost export. India will move in the direction of self-reliant and with global manufacturing hub. If you have any questions, we can answer it right now. Thank you.
Thank you very much, Mr. Khule. There are some questions which are coming up. I think that was very nice. It was, a real practical situation, which I think is really appreciated here. And I think between the three experts here, you, Mr. Jain, and Shashank, I think we are covering the subject really very well. And I'm really grateful to both the officers also for, really explaining things well. There are some questions which are coming up in the Q&A box, and I see that some of some of them have already been answered by you. Those which are not answered, we will record and we will share with you, and we will also share with the, with both the officers for, whatever, wherever it is possible to answer them, and wherever there are, questions that can be answered, we'll take care of that. So thank you very much, Mr. Khule. Please do share your, contact details, which we have. You can also put them in the chat box, so all the participants can note them down. That will be very useful, please. We'll be very grateful for that. With that, I think we now come to Mr. Ratan Jain from Lakshmi Kumaran and Sridharan, a very well-known law firm, which I think is dealing with several issues which relate to industry and corporate law and so many things. And I find that you are doing a lot of work in the anti-dumping area also. Some of them, our members, are also engaged in right now. But Mr. Ratan Jain and his colleague, they will be presenting on the similarities and differences between the SEZ and EOU schemes on one side and the MOOWR scheme on the other. So we have a comparison there from Mr. Ratan Jain. Over to you, Mr. Jain. Over to you, Ratan. Thank you. You are able to show your your presentation, please.
Yes. Good afternoon. Thank you, Elsina, for giving us this opportunity to address our views, our thoughts on this issue. As we already heard Punya Madam and Nangya Madam on this issue, and my colleagues, Mr. Gupta and Mr. Khule, by this time, I think the industry of these friends, they've understood the scheme about this. Still, there are few things which I would like to address. Hope my screen is visible.
Yes, it is visible. You can make full screen, yes.
So, we understood this MOOWR scheme, but management or the industry or any entity would want to know as to why should I apply for MOOWR? Should this scheme be eligible? Should this scheme be viable for me or not? So first and foremost thing is how do I determine the MOOWR scheme is beneficial for me? We all know this MOOWR scheme is not flowing from foreign trade policy. Foreign trade policy provides various schemes, EOU, advance authorization, EPCG, etc. These are the duty exemption scheme. The MOOWR scheme is not duty exemption scheme, it's a duty deferment scheme. So therefore, we should not understand that what we are importing in MOOWR, we are getting the exemption. It's a deferment of duty, as my colleagues have already explained about this. The cardinal rule we should keep in mind that taxes should not be exported, goods only should be exported. So therefore, if even in MOOWR, if anyone is importing any goods, and if these goods are used in the manufacture and then exported, the tax should not be levied, tax should not be subsumed in that. There are two types of schemes, duty remission scheme and duty exemption scheme. Duty remission, where the entity is required to pay and then the reimbursement is given by the government. For example, road tax or duty drawback. Duty exemption scheme, the advance authorization, SEZ, EOU, EPCG, these are the duty exemption scheme. And MOOWR is duty deferment scheme, wherein the unit would get the deferment till the time these goods are either cleared for home consumption or exported. So as Mr. Gupta and Mr. Kule already mentioned about this section 65A, which has been enacted in last budget, the section is yet to be notified, but one should keep in mind that this section would be applicable for the goods imported on or after the date of notification. But suppose if this notification is issued and these goods were imported or are imported prior to the date of notification, and if you intend to transfer these goods from one warehouse to another warehouse, applicable IGST is required to be paid. So let me repeat. Today, IGST deferment is there in MOOWR. Even if the imported goods in one warehouse to another warehouse are transferred, you need not pay IGST. But if the section is implemented, then already goods imported are transferred to another warehouse, applicable IGST is required to be paid. Now, there are various factors which we should keep in mind while exploring the MOOWR scheme. As Mr. Kule explained about the example, and you also explained that in MOOWR, the no drawback is available. But these are the factors which we should keep in mind. Drawback amount vis-a-vis actual duty suffered. Proportion of export business vis-a-vis DTA business. If suppose if you have huge exports, and if you are depending upon the import, then perhaps you can apply for advance authorization scheme or EPCG scheme. But if you have a capital goods investment and you do not have the exports, in that case you may not want for EPCG. If you do not have the export, then you will opt for MOOWR scheme. Road tax eligibility, as Madam already mentioned that this is in pipeline. So anytime we may expect the ministry to give the benefit even for the MOOWR unit about the road tax. But only thing is whether this road tax would be given from 1st January 21 or from the date of notification, that we need to wait for that. Risk factor, capacity utilization, compliances. So these are the parameters. I will just touch upon few parameters which may be relevant for the industry. So we need to keep in mind when we export and we import these goods, we need not pay the custom duty if we import against advance authorization. So for export, suppose in my example, export value is 100 rupees. Import duty actually suffered by me is 3 rupees. Import duty suffered in the supply chain. This I am talking about on the inputs procured by me. So this is the all-industry rate of drawback on the raw material which I procured is 50 paisa. Interest cost, this is the opportunity cost, is 50 paisa. So total outflow in my hand on the inputs imported or procured locally is 4 rupees. But if all industry rate of drawback is given to me, I'll be getting 2.5 rupees. And under actual brand rate, either under Rule 6 or Rule 7 of the drawback rules, I'll be getting 2.75 rupees. So actual loss in drawback scheme would be 1.25 rupees. So this is one of the analysis which we can make, whether in advance authorization or other than MOOWR scheme, in DTA scheme, how much consideration or how much benefit I am getting. So therefore, how will I check that? If my all industry rate of drawback on export is greater than the average industry rate on raw material plus actual duty suffered, then I can apply for the, I will not apply for the MOOWR scheme. If suppose if I have the higher proportion of the export, then I need not depend upon MOOWR. I can apply for EOU or SEZ scheme. But if higher proportion of business, DTA business, but few finished goods I export, then I can apply for advance authorization or drawback as well. If suppose if I have the substantial import, raw material and lucrative export, then all exemption schemes are viable for me. But if substantial imported raw material plus lucrative DTA outlook, then bonded scheme would be better because I will be saving the interest cost on that, on the raw material which I will be importing under the scheme. And substantial domestic raw material, suppose I depend on the domestic raw material and lucrative export, then bondage scheme may not be suitable because for local procurement of the inputs in MOOWR, no benefit is available. Applicable GST is required to be paid. But substantial domestic raw material and lucrative DTA, then none of the scheme would be applicable, I mean viable. Then this will be the domestic transactions. So as I said that if heavy investment is there and if you have export, then I would recommend EPCG EOU. But if heavy investment in plant and machinery but no export, then MOOWR scheme would be better. Why I'm saying EPCG scheme? Because in EPCG, you will be able to fulfill the export obligation. And once the export obligation is fulfilled, you are relieved from any further liability. In MOOWR, even though after 5 years, 10 years, 15 years, you may be getting the deferment of duty, but these duties ultimately are required to be paid. And today there is no clarity on the waste and scrap cleared from MOOWR applicable custom duties to be paid. We have been experiencing cases where the unit has imported capital goods, used capex they have imported. Some of the components of the capital goods they intend to clear in domestic market. Whether custom duty would be required to be paid or not. If yes, how do they determine the price of the component? How do they file bill of entry, etc.? So these are the practical challenges which may be there even if you avail this MOOWR benefit for capital goods. Job work facility is available in MOOWR unit, but job work for DTA, if there, then we would recommend EPCG and bonded warehouse. But if job work is for export, then SEZ and EOU. Road tape eligibility is there for all other scheme. For SEZ EOU, I'm told some internal deliberations are there and ministry is in process to give this benefit, but formal communication is yet to be issued. For road tape, for MOOWR scheme, this is in process. That's what we just got to know. MOOWR scheme along with brand rate of drawback is available. MOOWR plus all industry rate of drawback is not available. If in MOOWR there is no risk of fulfillment of export obligation, so if there is no certainty of fulfilling the export obligation or export commitment, then MOOWR scheme is better. While determining this scheme, we can just take note of that trading not eligible under SEZ EOU or advance authorization. So if any unit is of the apprehension that they intend to do trading, then SEZ EOU advance authorization may not be applicable. Different treatment of wastage under each scheme, that is there, and in each of these schemes there are norms prescribed, either SI and standard input output norms or ad hoc norms. In MOOWR, insurance policy is the cost, so that the unit is required to keep in mind. ITC accumulation, if there, then as of now, MOOWR scheme is better in that even the finished goods can be exported on payment of IGST. There is no bar in exporting the finished goods on payment of IGST under MOOWR. Compliance is geographical limitation, depreciation on capital goods that is not available in MOOWR as of now. Service export units get tax duty benefits only under SEZ UU, because in MOOWR only manufacturing units are covered, not service unit. So therefore, if service exporter is there, then SEZ and UU only is better scheme. So these are the few parameters which we should keep in mind while exploring the scheme, either MOOWR or advanced authorization or EPCG or SEZ. With this, I conclude my session. I am open for any question.
Thank you, Mr. Ratan Jain.
So I think we have finished with all the three presentations, and thank you again to Mr. Ratan Jain and to all the three experts. Asha ji is still there. Asha ji, would you like to say something to our experts here? I think we have had a very, very fruitful webinar. We have a lot of questions. So just 1 minute, please. Sorry, everybody, there was some disturbance here, so I was just trying to get that cut off. Extremely sorry about that. So thank you to all the three of you, and to Asha ji, to you also. If you are there, you may like to say something before we close. There are several questions that we have. I don't know if the three of you have seen them. Would you like to take up maybe a couple of questions right now, or we will leave them all to be answered offline? We can do that as well, because the questions are very specific. I mean, some of them are three questions that we had from one of the members, from rather two of the members, was they wanted to know about movement of goods from mover to mover. So I believe what they are saying is that if you move from your goods from one mover facility to another, what is the process for that, or is that allowed? So that was one question they had. And the other one was that, can IGCR benefits be availed simultaneously within the mover facility? I don't know what that means, but that means, I guess it means that you take the IGCR
Yes,
facility.
May I take this?
You can avail IGCR benefit in MOOWR scheme also. There is
Right.
no restriction for IGCR.
May I just add
Yeah.
that? See,
please.
the IGCRD benefit is not relating to MOOWR. It's there are notification
Right.
issues which require the importer to comply with the IGCRD. IGCRD is basically import of goods at concession rate of duty rules. And if the importer manufactures the finished goods using the imported goods, then the benefit is available. So even as Mr. Gupta also mentioned, that even if you import the goods and if the goods attract nil rate of duty by virtue of some other notification, those goods are eligible to be eligible for any other notification. So therefore IGCRD benefit is available.
Okay, and also they can, and they can of course take all the benefits which are there under the MOOWR scheme,
Yes.
which they can take. So both can be taken. Then they have said another thing, can the duty foregone be transferred from one MOOWR to another in case if the further manufacturer needs to clear them on DTA?
See, the transfer of goods from MOOWR to MOOWR with respect to inputs transfer, the scheme permits that you can transfer subject to the transferee unit undertakes or gives the bond. Then these goods are allowed to be transferred without payment of custom duty as well as IGST. But if one unit manufactures the finished goods and these goods are transferred to another unit, then in that case, applicable GST would be required to be paid, but no custom duty would be required to be paid.
Okay. Thank you. Thank you very much. So there are several questions. It is for the three of you to decide. Would you like to take any of
We can
them?
take
We can take some questions.
Okay, maybe so. I mean, they are there in the box. Maybe I can select a few. I mean, I don't know.
Yeah, that would be good. Sir.
Because I think 6 questions have already been answered. The first one is not very clear. They say we import material under MOOWR. I mean, the English is not very clear. I'm sorry. We import material MOOWR scheme. Our material HSN code is BCD Warrior. This is not clear. I will leave that. I will leave
What I understand is the question seems to be if you import a raw material in MOOWR, BCD is waived something, or after sales in India we pay only IGST. But answer is that if the finished goods are cleared in domestic market, then custom duty along with IGST on the inputs contained in the finished goods to be paid and applicable to the finished goods.
Correct. Absolutely correct. So this one I think has been answered.
There
and
is
I hope
no waiver for. No,
Sorry?
see, there is no waiver for BCD or IGST. This is a duty deferment scheme.
Right.
If you have to sell in local market, you have to pay BCD and IGST at proportionate rate.
Correct. So, and I think that's very clear. That should be clear to all the participants and everybody who's in the scheme. And this is an extension of the warehousing scheme, as was also explained earlier. So these two facts, I think, have to be remembered by everybody. The next question is recognition of deemed exports transaction under MOOWR scheme. Supplies against EPCG advance license to MOOWR.
So
this is very technical, yeah.
So therefore, this will not be considered as deemed export. Any goods supplied from DTA to MOOWR will not be considered as deemed export. Applicable GSTs are required to be paid on that. So even if EPCG holder or advance license holder, they supply the finished goods, it will not be considered as deemed export.
Okay.
It will be treated as DTA clear
Yes.
transaction.
Okay. The third one is asking about the fixation of norms for wastages. Who is the appropriate authority for that?
So if applicable SIO1 standard input output norms are there, those can be adopted. If there are no norms, then jurisdictional principal commissioner is required to decide that. What the norm will be.
Yeah, it is covered through SION only. There is no wastage specific, but it is standard input output. What is the standard input and output?
Yeah, the SION norm.
Wastage.
Okay. I think this has already been answered, no? Clarify for movement of capital goods from one MOOWR registered facility to another.
It's the same, sir, that it has to be covered under the warehousing provisions. I think it was already answered earlier.
Okay. The next one is a procedural question. Somebody is having difficulty in filing shipping bill for exports under MOOWR on IceGate. So this must be a procedural thing. I'm sure, I mean, shipping bill has to be filed for sure. So,
Yes,
I mean, IceGate should allow that.
No scheme for MOOWR. There is no scheme code for MOOWR.
There is no
scheme
code
on IceGate.
Scheme code for MOOWR shipping.
Okay.
But shipping bills are being filed from clearances are being made from MOOWR. So does the question really imply that? Because people are already registered under MOOWR and they're undertaking exports.
Correct.
I think the question wants to ask something else. There is no provision of filing shipping bill for exports under MOOWR on export. So what under MOOWR meaning what? If you're exporting, you have to just that's an export in itself. I think under
No. There should be scheme code for mover transaction, mover export. So I think he's asking about that question. That no provision of filing shipping bill for mover. There is no scheme code for mover. If you are exporting from mover unit, there should be an scheme code
so, but is
like
there a
EOU,
requirement for
drawback,
that?
EPCG.
Is there a requirement for that in the first place? I think
Yeah,
the law simply requires you to file, if you're that's a DTA clearance, you have to file a bill of entry for home consumption. If it's an export, you have to file the shipping bill for export, and that does what is required under the scheme.
So we'll
see if
take
there
that
is
question separately. I think it's a procedural thing, and we can take it separately. So maybe there is something to do with the procedure. As Mr. Khule said, there is no code. I think there must be a code is required to log into IceGate, right? For
Right,
that particular type of export from MOOWR. So somebody,
yes.
exporting from a DTA or somebody exporting from a EOU or SEZ must be having different codes, right? Is that correct?
Sir, respectfully, I think it is not about login. It's just about the scheme code. But I think there is legally no requirement, in my opinion, for that.
No, if there is no scheme code, then there might be a misuse of mover scheme also. You can go for road tip or drawback if there is no scheme code. If government allotted one scheme code, then custom will not allow you to get these benefits, road tip and drawback. So there must be a scheme code for mover export.
Okay. So I think
This is my
we need
opinion.
a separate,
I think that's
I
a
think we
different
need a separate
question.
discussion on this. Maybe it's a little complicated. So I think with that, there are several other questions, but keeping the time in mind, I think we can leave them. We have all the questions. I think what we should do is that, we'll decide right now that we will send all the questions to the three of you,
Sure.
right? All the pending questions, and you can have a look at them. And plus, thank you for circulating all your contact details. And you are anyway.
Sir,